What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It's June 9th, 2021. Beginning of the summer is almost upon us. Please go ahead and click the like button on this video and subscribe to my channel. It really helps with the YouTube algorithm. Another thing is I believe in order to live stream, you need 1,000 followers on your channel. So any likes, comments, sharing the channel really helps. I would love to get to that 1,000 follower mark and start streaming for you guys. Today we're going to start talking about the price action in the indices. We're going to go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and then we'll go through options order flow. Before we get to all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, don't YOLO your entire account to any single one of my trades. All right, let's jump into it. So today, what happened today? A whole lot of nothing. So if you are like a swing trader, price action trader, whatever, today in the grand scheme was a pretty boring day. And I had a feeling that today could be very boring because we have essentially a binary catalyst tomorrow, which is the inflation data that is going to be released in the pre-market. So my thinking with this data is that the expectations are pretty high for inflation. I believe it's like a 4.7% expected number. If we come in, say at like 5.5, that could really spook the market and get everything off to a bad start. If we come in, way under that expectation, maybe that could be a little bit of a relief rally. So I see it as like this binary event that I don't really want to step out in front of either way. So today we had the S&P 500 as measured by the SPY closed down 0.15%. We had the NASDAQ QQQ close up 0.02%, and we had the IWM small caps close down 0.67%. Almost forgot about the Dow Jones. That closed down 0.45%. So what I'm seeing here is I think these market participants are front-running these numbers, and they think that the inflation data is going to come out light. Because as you can see, these are our ZN futures. These are 10-year Treasury futures. And you can see they had a really nice day, up 0.2%. They did not close on the highs, but the bond market would not be rallying if everyone was expecting a huge blowout inflation number tomorrow. So we'll have to see what happens. Yeah, S&P 500, if we look at this candle, you can see we've had three red candles in a row. So this is some distribution, meaning that, from the open to the close on a net basis, there was selling. Keep in mind, this is just a doji candle, really tight range throughout the day. So if you were trading this, most likely you bought the S&P 500 at a higher price than where it closed, because you can see if we look at this hourly chart, I guess there was an intraday. This was the morning here. If you look, we were pretty much trading in a tight range. So at the entire day, we actually popped up. Right in the morning, and then we were pretty much selling off. Then into the close, we kind of sold off. So yeah, maybe this would have been better if I pulled up this 5-minute. Yeah, so 5-minute chart, you can see once we got to the latter stage of the session, we broke this daily point of control, and we actually closed, right around this daily value area low. NQ, let's pull that one up. The NQ is strong today, so closed up 0.02%, pretty much unchanged. Yeah, and you can see the NQ had a really nice push higher, and then it was sold off. So to me, what this looks like is just a lack of conviction, and it looks like people are just trying to de-risk a little bit ahead of some binary events. Yeah, because we have the inflation tomorrow, and then we have Fed Wednesday next week. So yeah, Russell, this one you can see here, Russell down 0.67% throughout the session. And yeah, this one's had a really nice run. So in the grand scheme, this is not a big fall for the Russell. And then last but not least, the Dow Jones. You can see this touched back into this monthly value area here. And if we get a nice tame inflation number tomorrow, I would expect the Dow Jones is not really going to be leading us higher anymore. But we'll have to see. So let's dive in a little bit deeper here. We're going to look at our market breadth. And I always watch the market breadth throughout the day. We actually closed on the lows in terms of market breadth. So throughout the session at varying points of the day, this market breadth was positive. You can see all four indices closed with very negative breadth. The Qs was the best, 49% advancers. And for me, I put this is in our member chat for the Pristine Capital trading community. You can see here. So I put this out. Yeah, 1017 sitting tight for the most part this morning after making a few adjustments on the open. This could be a very boring day. And then right here, I feel comfortable with my positioning. This is at 1038, going to step off the desk for a run before I do something hasty. So I actually got off the desk, from about like 1040, till about 1 o'clock, to be honest, because I knew there was just not much to do here. And when there's not much to do, I want to make sure I remove myself or occupy myself with something else, because that's where I personally make mistakes. I don't know about you guys watching the video, but I make a lot of mistakes in that 11 to 1 o'clock hour. So that's something I'm working on within my trading. Let's see this FinViz heat map. You can see the tech names are strong. So Adobe was up 1%, Microsoft was up, Apple, Google, Amazon, all positive. Healthcare and utilities also very positive, but there was profit taking pretty much everywhere else. Sectors, we were down 1.27% on these European financials. You can see another weak area of the market, the industrials, home builders down 1.46%. And what else do we have here? Yeah, aerospace and defense. So a lot of these more like cyclical areas of the market. You can see the SPAC ETF was down. The leaders were, you can see, where were our leaders? Where are our leaders at? ARC Genomics was up 1.24%. You can see biotech was up 0.94%. So really nice. This entire healthcare part of the market is doing pretty well for the moment. And then, I see the blockchain ETF was up slightly as well. Now, if we pull up our style factors, you can see in terms of style factors, we have the momentum style factor down 0.82%, high beta down 1.29%. Then the only style factors that were green, we had the growth style factor up 0.01%. Then we had min vol up 0.21%. So pretty conservative price action today. And pretty much throughout the day, it was just people distributing to each other. So on a net basis, some selling going on in the market. So what did I do today in terms of trades? Let's pull this up here. I'm going to pull up. This right here. Okay. So this was at 9:39 a.m. So I entered some July 16th 422 strike SPY puts for $7.13. I put here this at 9:39 a.m. playing for a green to red move given the pop in equity vol this morning. So this was definitely something that everyone should have been looking at. And you can see here, so if we pull up the VIX was higher today. So we closed up 4.8%. And then also the VVIX, we had a huge gap up in the VVIX, and then we held that gap the entire day. So that is definitely a red flag when you're trading. One of the most important things in terms of being a trader is just knowing there are certain days when the wind is at your back and you want to be shooting the lights out with your trading, doing a lot of activity, putting on positions. Then there's days where the probabilities are just not in your favor of putting on long positions. And that's something where I notice older traders are much better with that, because I guess they've been around the block so many times. But I think for a lot of newer traders or younger traders, it's tough to be inactive because we want to be making the same amount of money every day. That's like the natural thing. We want to be trading the same amount every day. It's almost like if you work a 9-to-5 job, I work from 9 to 5 every day. I take my lunch break at noon every day. I put the same amount of output, out every single day. Whereas with trading, you can actually be penalized for doing too much. And there are certain days where you can get paid to do nothing. So that's like a huge, that still blows my mind. Like where I'm like, so I walked off the desk from like 10:40 to like 1, and that actually benefited me. That blows my mind, but it's something I want to keep exploring. And I think it's super important. Like, and this isn't me saying like, oh, just don't be at the desk. Like, don't put the work in. Like, you have to put the work in, like 100%. Like, I spend, probably like 80 hours a week on the markets, looking at the markets. I love this stuff. But yeah, it's kind of cool for me to be like, today I don't have to do any trading. It's very weird. That's a little bit of a side tangent. But anyway, so the VVIX was elevated. And so what did I do here? So I put on some puts in the morning. I closed out some skills 25 strike calls. I had a runner on. I closed it out for $4.10. I'd paid $2.85 for that. I had taken 2 targets on that prior. And then, yeah, 229. I set a stop at break even for my SPY puts. And I just said not seeing any reason to go into tomorrow short. So that was good. Where instead of just saying like I'm taking these off, I've added a stop at break even. And the market ended up like literally minutes later, just having a little bit of a dip, nothing crazy. But yeah, into the close, I took off those SPY puts that I added at 9:39 a.m. I took them off for 780. I had paid 713. So nice little winner there, nothing too crazy. Because the one thing that I don't want to do as well, with my system is telling me, hey, you still want to be net long the market, but not crazy net long, not leverage net long, anything like that. So I want to make sure that heading into the CPI print, I don't want to be like, oh yeah, I'm going in short because I think the CPI print's going to be bad. Like, it's not that. For me, I was really playing for, hey, we might get some profit taking that occurs ahead of the print. That's why I just took those puts right off. Pretty much we got what I was looking for. But what could very easily happen tomorrow is the inflation data comes out. Oh, we're expecting 4.7%. It came out at 4.1. Then the market might, just take that in stride and be like, yes, inflation is transitory, booyah. And then the market could just rip tomorrow for all I know. Conversely, it could just flop. Like, I really don't know. So for that reason, I was like, I'm going to take these puts off. And then for some stock trades, so in the morning, this said 9:33 a.m. I forced a target in a half of my DocuSign. I had some common shares on for 242 spot 50. I had paid 239 spot 10 for those. So I wanted to take something off and just, hey, let me consciously put something in my pocket. So I took that off. Then literally 9 minutes later, I took the remaining half of it off. I closed it for 239.20. I had paid 239.10. So yeah, that one I was like, okay, DocuSign. It's not really like a core position of mine, something I was just trading. So for that reason, I was like, you know what, I'm going to take it off and just get a little bit lighter into this print. Yeah, I see here DocuSign close with, a pretty negative day here. So yeah, not too great. And then, yeah, so I did that. And then I closed out. I put on some STLD yesterday. I had paid $65.65 for this. I closed out for $64.92. So small loser on this trade. And STLD, I know it's like a thing, like talking about losers is like taboo. Like, no, nobody loses on FinTwit. Whereas like losing trades it's really part of being a trader. The most important thing is to lose trades with grace. And this one again, this is definitely a more inflation sensitive name. So I wanted to take it off. Like if this thing had ripped, that would have been great. But you can see we broke out to new all-time highs and then we failed here. I was like, yeah, I'll take it off for, a very tiny paper cut loss. That is 100% one of the reasons why traders fail big time is they're not willing to lose 60 cents on a common stock trade. Like they just don't want to do it. And then the loss, will turn bigger and bigger and bigger. And eventually you get a portfolio of losers. So for me, I just try to keep it very tight. But that was all I did in terms of trading. Let's jump over to options order flow real quick. So we're going to jump into our VigTech options matrix here. And I'm going to pull up the TradeScape. This thing's pretty cool. So you can get a pretty quick and dirty look at where the majority of the options activity was. So this is like, I just find this really cool. And a lot of activity for IWM today. Geez, I normally do not see this much. So IWM, you can see all these orders. And yeah, I see a 99 million for this 140 strike. And they all expire 6/18, so that's very weird. Maybe somebody's just adding exposure. I see these for 2022. So yeah, definitely some big positioning in the small caps today. And the small caps, like I said, they had a down day, but they're still in a really nice trend here. And they're really just starting to break out. Like, if we pull up the weekly, maybe this was like the dip to buy in the small caps. Who knows? We'll have to see. Time will tell. And then some other ones that were sticking out. I see EEM had a lot of options activity. These are for June 18th, 46 strike calls. Let's see if there was anything further out than just June 18th. Yeah, this is all June 18th, so I don't really know what to make of this. 57. Let's see the chart of EEM. EEM, yeah, finished down 0.29%. This is the weekly chart. Yeah, this one had a really nice run, got very overbought, and now it's had a pullback. So yeah, EM definitely looks pretty interesting. Let's take a look. We'll maybe pull up one more. Another one, Upstart, $79 million worth of flow. Okay, and this is for October. These are 30 strikes. That's definitely like a stock replacement play. These are for June 18th, 45 strikes. Yeah, this might have something to do with options expiration where these players, maybe they just want to take delivery of the stock. Who knows? But yeah, these are for July. Yeah, it looks like there's some positioning around options expiration. But let's see Upstart. Upstart closed down 5.91%. These are the dips that I am here for. So let's see. Upstart. I'm long this one in the Pristine Capital Trend portfolio, but I am not long in my trading account. I've been trading this one pretty actively, and this has been one of my better names, getting small like scalp winners, small swing winners, stuff like that. And this one, I like where it's at right now. So pulled back to this monthly value area high. And this 20-day moving average is starting to catch up to price. One thing to keep in mind, though, their share lockup expiration is June 14th. So that's when the insiders can sell. Yeah, this one in a really nice technical pattern. So we'll see what happens with Upstart. That about does it for this recap video. Hope you all had an awesome trading day. If you're interested, feel free to reach out to me about becoming a member of the Pristine Capital trading community. You can go to pristinecapital.net. Feel free to send me a message on Twitter, if you want a free trial of the group. We would love to have you. That being said, have an awesome day, everyone. I will see you all tomorrow. I am actually about to go hit the gym.